So, hello YouTube and welcome to yet another video, trading video regarding order flow trading and the difference between the DOMs. The DOM I use, so the jigsaw DOM, a regular DOM, which you see here, and especially like what I want to go over is like the inside columns, like the market orders which are shown here. Why I do think it's important. Especially for scalpers, but pretty much for every trader, because every trade pretty much starts as a scalp. You can get more accurate even if you're a position or move-to-move trader. Every trade starts as a scalp, and you can get more precise entries if you're a good scalper. So I want to go over this a little bit. I tried to make another video the other day, but then it ended up being another 30-minute video where it's completely blown out of structure. So now I really try to structure the video. So stay with me. This is gonna be a little series, a couple short videos. I hope to keep them short anyways. And so you also get a lot of value out of it, So first things first, we are in the pre-market now, so overnight session, London session to be precise. So there's a lot less volume than during a regular trading session when the market is open. But I think it's fine, especially now because we do have less volume. So it's slower, and I can explain it a little bit better, So on the right side or in the middle, you do see a regular DOM, so depth of market, just a standard depth of market, which literally every broker and every platform provides, In this depth of market, you only see the limit orders on each side, So you see at each price, so like 31, so this is even like a little bit slower, this DOM, you can see here. And the jigsaw is very fast, now we broke here. Anyways, so you can see the limit orders on each side, like they are similar to this. It's like to be exactly the same usually, because this is live data, But what you don't see is the inside columns, So here we do have the limit orders, on each side. But just because the number is there, and just because they are there, doesn't mean that they have to be traded once price gets there, because obviously, like you see here on the right side, people are constantly adding to the limits orders and removing. So I can add a limit order here, for example, so then it would be +1, and then I could remove it again, and I can do this as often as I want to, pretty much, So that's why the inside columns are important to me, at least, to be honest, So I do want to pay attention to the inside columns, because this is market orders, The inside columns is the numbers of orders that actually traded at this price, So when you look at this, for example here, now you can see 22 orders are sitting there, now 30, now they are stepping up a bit. Now they're hitting 22 into the bid, And they cleared the bid and moved it down, Here 24, here 5, here 30, So that's the number that's actually been traded here, And it's very important, like, to know the difference of a market and the limit order. So every limit order, so limit orders are the resting orders on the book, here and here, Limit buy orders, limit sell orders, also called the offer or the bid, And then you can have aggressive orders, that's market orders, So in order to fill a limit order at any price, you go market, So, and you market buy, for example, and that's where the spread on an actual futures broker comes from, So the spread is always, or most of the time, one tick on a fig market. Obviously, like if you're trading something very fast, maybe crude or something, like during news or NQ, like you can, if you market buy and there is no liquidity here, you could get a bigger spread, But that's for that, So you have the aggressive buyers in the middle, and aggressive sellers. So this is an aggressive seller. He is willing to take the spread because he thinks he won't get filled on the offer, So that's the thought process, Why else would you sell at the worst price and pay the spread? Just you would do it because you think, oh, I won't get filled any higher, So this is aggressive selling and buying in the middle, and this is passive buying and selling, okay, on this side. And you gotta remember those orders work together, okay? So like in order to fill a limit buy order, you need an aggressive seller, okay? So, or it just won't execute, okay? So that's how market moves, okay? Like if there's less people willing to sell at a price, so right now we have 33 people here, 20 people here willing to sell. Now we had a lot of people buy, okay, 69 people buy here, like 81 buy. They're refilling this offer here. For example, here you can see they're refilling this offer. So they are kind of interested in selling this, okay? For now, at least. Then your price doesn't go up because there's always more people willing to sell the 34s, okay? Here, 34, 25s, okay? So they are always interested in selling this price. So that's why we're not going up. Now, just two traded there, they immediately went here again, so aggressively sold more, okay? So for now, it looks like the 34, 25 wants to hold. Now we're approaching it again, for example, okay? And now again, no price traded there, okay? That's also always a good sign if you're a seller here. Nobody's really interested in selling the 34s, buying the 34, 25s. Now we have some buyers interested, but once again, getting refilled and getting pushed down, okay? So that's why I think it's very important to have a good depth of market program software and to constantly keep looking at it, okay? So that's the difference between limits orders here, okay, limit sell orders, limit buy orders, and in the middle you do see the market buy and market sell orders, okay? That wraps it up for this video, okay? I'm gonna keep these videos very short, okay? If you have any questions regarding limit buy and sell orders and market buy and sell orders, feel free to ask them in the comments, okay? So obviously I do appreciate the comments. They also help me out with my algorithm and stuff like this. But that's just a very short video, okay? I want to keep them short. What is a limit order? What is a market order, okay? So market orders, once again, I repeat myself here, but I want to review it one more time. So market orders are the orders that are moving the market, okay? Because you're paying the spread, okay? You're willing to hit at the worst price in order to get filled, pretty much, okay? If you're limit buying or selling, you need someone else to hit into you, okay? So that's pretty much the difference, okay, of limit and market orders, okay?